Today is Wednesday, May the 20th, and you can see that from the open, that was pretty much all we got. We started to play around. I bet you anything those are Fibonacci numbers or those are pivot numbers. So the market was just trading normally. No bad news throughout the day, so we got a bit of a bump. Volume doesn't look very good, advancers and decliners, which leads us to the Mcclellan Oscillator, which is where over here. Here's the Mcclellan Oscillator. Now, let me show it to you in a different way. That's this way. And we see that we have a high, a lower high, a lower high, and a lower high. This is what we've been watching for the last couple of weeks. We knew that this was pretty high, unsurmountable. So this was a natural level to hit and get some pullback. This one, not so much. And this one again. So now we're watching very carefully. We're probably going down to test 0 again. If we go higher, then we reverse the trend of these lower highs. So we've got a line here, not quite a line, but we've got lower highs. And we've also got on the bottom, we've got higher lows that have formed, back in March and then again at the early part of May. So we're going to look to see if the bulls can keep the oscillator from moving beyond this line here. We've got a wedge forming. It's going to break one way or the other, isn't it? But just historically, we can see that when we've had the lower highs, one matching it, lower, lower, bang, we went down. Coronavirus, yes, but anticipated, maybe. Mcclellan Oscillator is a pretty damn good indicator. Here we can see the same thing, lower highs, and we've reviewed these before. And then here we can see the opposite, which was some higher lows, and up we went to hit the overbought line. So what does that tell us now? If we look at our other Mcclellan generated charts, we see that the stacked volume looks like this. Lower than Tuesday, lower than Monday, typically lower than last week, in line with the week before, so volume is not giving us much of a direction. I thought it was. We had increasing volume last week into Monday, and now it's tailed off. The total shares traded of advancers and decliners looks like this, and the summation index is turning a little bit upwards. So we didn't get much of a pullback, just one of these kind of things. Doesn't mean that we can't suffer another down leg, which people are still talking about. And frankly, that's what I'm thinking. You all know that I'm conservative. Pretty much everything I buy, I try to get a better price for it by selling a call against it. It limits my upside for sure, but it's always worked for me over the years. It's always provided a steady growth of income, and that's why I like it. So we're looking at the S&P, and the S&P, which was up 1.7%, gets above the Chiku span, above the 200. That's a really good sign. So you would think the market's going up, but there's nothing wrong with coming back and testing that 200, which we had difficulty with for 2 days, testing it one more time. And I'm going to suggest that maybe we're coming down to test the 200, but then we might move up. Apple, huge, powerful stock, definitely heading towards its all-time highs. It's hanging around its Gartley top here. It's going to break above it. Volume has been declining, but this is just a bear of a stock. It's just a bull stock. It's one you want to own, hold on to, certainly hold on to. But I wouldn't buy it I wouldn't buy any more unless I had a bit of a pullback. Let it get to 327 and then watch it come back maybe to 303 again, if the market stumbles or coronavirus cases pick up. Caterpillar continues to move up. Look at the Chiku span on the candle here. So that's a bit of a resistance, but look, we've got some support here and we can move higher. CSCO, we haven't looked at in a while, but it was up $1.02, and look where its high today was. Pretty much the Chiku span hitting the 200 and being brought back down. Definitely overbought here on the stochastics. Stopped at the 200 SMA. So yesterday it was the 200 EMA. Today it's the 200 SMA. A break above that. This is an affordable stock, $45. I believe it has a dividend. So definitely one you want to keep an eye on and maybe stock up on. Home Depot. Now this was the expected move for earnings on Tuesday morning. And look at where we dropped to today. Just to the bottom of the expected move range from earnings. So you could say that the market makers were correct. The day that earnings was Tuesday morning was right down here. So we were kept up by the 8 EMA. We didn't hit the bottom of the market makers range, but we definitely hit it yesterday and we moved up. This is still a stock that I love. It's going ex-dividend on June the 3rd for $1. Will I buy more of it? Well, I rolled my short 245 puts and picked up another 89 cents. I don't think it's going to hit 245 this week, but I do think it's going to hit 245 in the coming weeks if the market holds up. And if it does, that's great. You know, I can pocket my premium. You know, if it doesn't and it goes down next week, I'll be able to buy I'll hold the stock, but my net cost will be under 239. It'll be another 400 shares that are eligible for the $1 and odd cents dividend. So I'm happy with that. Facebook, all-time high. Look at that. Here's its Gartley pattern, and it's certainly heading to break the second target of the Gartley pattern, which would be 13% increase over the X and A downwave. Here's another one that we haven't looked at in a long time. Global. It's transaction at Global Payments Network. Where did we see its high today? Let's do that line thing again. And where did we see the high today? Right at the top of the cloud, and then pulled back. So the Chiku span continues to show you that if you're doing intraday trading, these are the places where you take your trades off. I'm not that kind of a person. I'm a swing trader. I'm going to be in it for 4 days, 2 weeks, a month, maybe longer. But if I'm in it longer than 4 days, I've got covered calls. But if you are an intraday trader, and let's say you bought here, then you want to take it off when the Chiku span hits the cloud. And that's exactly what happened. Got a pullback. Still like the stock? Buy it again back here. Or wait for confirmation that it's going back up. Wait for it. Wait to buy it over 185, or wait to buy it when it comes down to another test area, either the Chiku span on the 200, which is right here, and would coincide with this candle, and the close of the gap. So look for all of those. Coincident signals. So we've got a bottom of a gap which is right here. If we extend the bottom of the gap outwards, we can see that the bottom of the gap intersects with the 200-day simple moving average, not only price-wise, but also with the Chiku span hitting it. So look for a possible pullback to fill that gap, and then you would want to buy right here. That was FSLY, Andy. Nice move, up 6%. GDX, a bit of a pullback. Coca-Cola, still struggling. Netflix, still, it's completed the top of its shark pattern. It's either going to break out of the top of this shark pattern and come down. I don't believe shark patterns are not one of the 3 or top 5 primary patterns, but it exists. I would call it a minor Gartley kind of pattern. I don't think we're going down to 146 with Netflix, but would be interesting, so let's keep an eye on it. NVIDIA, crazy stock. Look at that. Finished today in between the high and the low. Still a very strong stock. If we look at it on the cloud on a weekly basis, nothing there that says that it's not going higher on a monthly basis. I mean, just out of sight. So let's take a look at the SMIs perhaps. Where did the SMIs go? And you can see that we are looking in the overbought area. So, you know, it's a risky stock to buy here, but, you know, if you're holding on to it, you certainly want to keep it. And where would you put a stop? You would put a stop right there, whoops. You would put a stop right at the top of the gap. If it fails the top of the gap right here, then you want to get out. So put an alert right at the top of that gap, or put a trailing stop on it. If it goes below there, get out. If it bounces off the cloud, start chipping your way back in again. W, disappointing stock. I thought it would do much better. Still think it's a great stock for the future. We've got to analyze this one and try to find out what kind of a pattern is building up here, and when would be a good time to get into it, because I still think it's a great stock. I want to look at that a bit tomorrow. Amazon, new high, powerful stock. Disney, up 4% today. God knows why. I don't see people going back to the theme parks, but it would probably be their entertainment business, their online business. Look at where we stopped today, right at the cloud. Not quite, but tomorrow, this high tomorrow would be the top of the cloud. So if you're holding on to Disney and you want to take a short-term profit from this bounce right here, that would be where you start stepping out. Thanks very much, everyone. I really do appreciate all of your support.